everybody. My name is Franz Hochstrasser. I am the CEO and co-founder of Raise Green. We are the climate investment platform. And I worked on the Paris Agreement, negotiating as a US State Department staffer. And investing in climate really is the largest economic opportunity in history. But the question is, who's going to own it and who's going to benefit from it? And investors want impact, but there just aren't enough bankable projects right now to invest in. So we're seeing big scale ups in the amount of capital flowing into the space, but it's not necessarily flowing to where it's most impactful. So in the US alone, $110 billion is the size of the distributed energy resource market that's needed by 2025. That means 70% of commercial buildings could have solar, only 3.5% of them do. And so that's a huge gap we see. At the same time, you've got 85% of individual investors that want sustainable investments. 99% of millennials want them. So our marketplace at Raise Green, which is invest.raisegreen.com, allows us to connect climate companies with investors that are seeking impact. For the climate companies, they get flexible financing terms to access capital. They get credibility by having structuring support through our software, and they get access to customers as well by building a brand of community engagement. And for the investors, they get to use our SEC and FINRA registered marketplace to access this new ESG asset class, and anyone can invest, accredited, non-accredited, and institutional players. So we've built technology that fuels this marketplace and cuts the soft costs in structuring these types of offerings through standardization. We believe it's the first business process automation software specifically focused on climate tech. And what that means is that somebody can come to our marketplace, we can collect their variables about whether they're doing a project finance company or a climate tech startup. We apply templates for securities, for corporate formation, and we output a financeable project that we can list on our marketplace so investors can access it. And we found that those investors are accessing it. So our investor base is growing fast. We have a profitable LTV to CAC ratio, and we've added about 40% month-on-month investor growth since launching in July of 2020. And this is William Mac Bowen, our investor of the month. He says voting with your dollars is a great way to have an impact. It really adds up, and he feels optimistic when he does it for the future that he's leaving his children. So our traction to date is 15 securities offerings since July of 2020. We've done 1,100 trades, 2,100 accounts, everything from $100 investors like Mac Bowen to $400,000 investors. We've mobilized more than $4 million, nearly $5 million through the marketplace so far. And we have an active pipeline of $11 million of solar, energy efficiency, climate tech companies that are moving toward listings. We've also worked with some of the premier climate tech companies like Block Power and the Connecticut Green Bank. We make money off of a 5% success fee on every dollar raised and a 2% security stake that we take. If it's debt, it'll pay out like an annuity. If it's equity, we could benefit from the upside of an exit or eventual growth of the company. And this market is exploding. So last year, the sustainable investing market nearly doubled. It's 330 billion in the US right now, according to Glenmead. And again, we're focused on that $110 billion of US distributed energy resources. And we've carved out a plan to get market share of $1 billion through the Raise Green marketplace by 2025. So how do we do that? We build on our product market fit to date. We have 18,000 signups on our newsletter. Turning those folks into investors is the next step. We continue to automate and build out our software as a service, expand our template library, and shorten the time it takes for somebody to get through the process of creating one of these listings. And then repeatability is crucial for our success as well. So we work with channel partners like Onyx Renewables, who we have an MOU with, and we're part of the Department of Energy's Credit Ready Solar Initiative as well. My background is in climate and clean energy at the White House, the State Department, and then I went back to graduate school at the Yale School of Environment, where I met my co-founder, Matt Moroney. He's a data scientist, environmental chemist by training. Our chief investment officer, Jackie Logan, has 20 plus years of capital markets experience, most recently at Goldman Sachs. And our CTO, Charlie Berg, has 7 previous software exits in his career. We're at 10 full time right now, and we want to take it to the next level, but we need your help.
I got to cut you off now, Franz, but I think this was the last part anyways.
Perfect. Yep. Raising $2 million. Looking forward to your questions. Thank you.
And thanks for the presentation. It's an awesome company in terms of what you guys are trying to do. I've got questions, but first, Kostas, Nadav, you guys want to kick things off?
Fantastic. I'll jump in first. First of all, thank you for the presentation, Franz. I think you've done a great job. So great presentation. Quick disclosure to Matt, Kostas, and the other people on the call that Franz and I spoke once last week, and I was already impressed with him and Raise Green and the mission. So you know, one quick thing that comes into my mind, and then a quick follow up. So first of all, you know, it's a lot about the numbers here in terms of what you're trying to create, because you're trying to create a marketplace, and it's not easy. I'm not sure. I mean, obviously, you know, the demand is there. There's almost already $40 trillion in ESG. You know, it's clear that the younger generation, millennials, Gen Z, you know, there's no doubt that demand is going to be there. I think it will be a somewhat competitive space. And the fact that you're having an impressive CAC to LTV ratio, I think it's I think it's definitely very important. Can you tell us a little bit more about how you're attracting new investors?
Yeah, absolutely. You know, the key is to grow that investor base, and what we found is there's a bit of a rule of thirds around it. Every time we bring on a new issuer onto the marketplace and they're selling securities for the first time to raise capital, they usually bring about a third of the investment from their networks. And so those folks get introduced to Raise Green through a brand that they are already interested in. So that's crucial for us to continue to bring on new issuers. Secondly, you know, we have a growing investor base and a consistent inbound strategy to acquire investors. So we're writing blogs, we're doing podcasts, and we're building networks through organizing. I was the Obama field organizer back in 2008. So we're plugging into, you know, local climate activist chapters across the country and working to build trust that way. And then the third portion actually is really more of a blended finance approach in that we're going after some institutional players that are thematically interested in the area, but can write bigger checks. We are, you know, actively in an outbound way making introductions with money managers and impact-oriented investment funds that want a consistent source of deal flow.
Thank you. And one quick follow-up question: in terms of the numbers, what's the average investment size in terms of the returns?
Yeah, our average investment size historically is about $4,500.
Pretty good for crowdfunding.
Nadav, we cannot hear you. You were trying to speak. We cannot.
Like we said at the beginning, technology is great, except when it sucks. I'll take over for Nadav then. So one question I have, Franz, is how do you deal with almost negative selection bias that you see generally in crowdfunding and crowd equity, where the companies that can't clear market with VCs and angels then come to the crowd platforms to go after unsophisticated investors or dumb money?
Well, so I think that may have been the case kind of early on as equity crowdfunding was getting its feet here in the US. I think increasingly, you know, as popular accelerators like Y Combinator turn to crowdfunding as an option, and founders also, whether you're doing a, you know, climate tech company or you're developing a community scale solar or clean energy project, are taking kind of agency into their own hands by structuring deals in the way that they want to see them presented, and then giving their supporters an opportunity to buy into those. So I think it's as an exciting of a time as ever to be in the space of being able to give those tools to entrepreneurs and heroic climate founders that want to deliver projects with real impact, to kind of take back the agency that investors often have had it historically.
Maybe
Understood.
sorry, Matt. If I can jump in with a question, can you talk us through the kind of operational burden? So I guess there should be a lot of compliance issues, legal issues, etc. That should be a significant burden. How do you go about, not having a huge operational expenditure while making sure that everything is done properly?
Yeah, excellent point. So we are SEC and FINRA registered, which means we're a regulated entity, and so and then on top of that, we seek impactful investments. So we're adding our own screening of projects in addition to what the SEC requires. The key for us is automation. So that's why we've invested early into the software, and we call it the originator engine. But effectively, what that can do is create asynchronous due diligence for us. So the developer or the entrepreneur goes through a guided journey to construct the document sets that we know that they need. 80 or 90% of those are templates that we have set out in advance, and then the additional 10 or 20% is what we have to end up reviewing at the end. So that really condenses the time that my staff spends diligencing deals, and just focuses it in on the impact as well as the viability of the investment.
Got it.
Guys, can you know? Is that okay?
Looks like somebody else has a question too. So one of the questions that I had for you, Franz, was which area or which vertical do you see the most traction currently happening on Raise Green? Is it solar wind park? Is it wind parks? Is it solar? Is it startups? Where do you see kind of the future for growth?
Yeah, so we're still very young as a company. We've done 15 of these deals, and where we've seen the most traction thus far has actually been energy efficiency. So a lot of the issuing companies find it as a nice source of low cost debt, and the investors, I think, find it as a nice source of yield as well as impact. And so that's been an area where we've had early traction. We're especially excited about solar, which is coming on with more and more projects recently. And then we've really just opened the aperture to include climate tech companies as well, raising rounds. And so there's increasing interest from them now as well.
Great. Franz, can you hear me now?
Yes, you're back.
Okay,
Yes.
I'm back. I've been switching headphones here right and left. Okay, good. So I mean, first of all, I'd love to maybe a little bit more about the team, because I think you guys have an impressive team. So if you want to give us a little bit of background how all of you came together, and then maybe afterwards I'll ask you another quick follow-up question.
Sure. Well, so after I came out of the Obama administration, I decided to go back to graduate school. And Matt, my original co-founder, and I met on our very first day of class. He's a scientist, and I'm a policy and sort of finance person, and so we really hit it off right away in very complementary ways, and collaborated on a number of projects, solar price dispersion, building mobile air quality sensors, fun stuff, which ultimately led to starting Raise Green. We came across Jackie about a year after that at the Climate Week in New York. So she's full-on New Yorker, has spent her whole career on Wall Street and really wanted to get into stuff that was more heavy on the impact side. And so we convinced her after about a year of recruiting her to join the firm as a co-founder. Charlie Bird joined us after the Techstars program. We did the Future of Finance program with ABN AMRO and Techstars last summer. And Charlie's been an integral part of the tech side of our team. We also have, Cambridge engineer on staff, a former VC analyst on staff. We've got some great, business professionals, former Morgan Stanley, Michigan Business School, really smart people working really hard. So excited about our crew.
What's the biggest risk to your business? What could hold you back from success?
I think the biggest risk, honestly, outside of resources right now, in this challenging market, really is not capturing market share fast enough. So brand awareness, is crucial for us, and that I think comes through, a considerable outbound marketing campaign and effort, and then being able to convert that efficiently through investing in tech and growing the tech apparatus that we have. So I think it's more so than anything, resources at the moment, but very quickly brand awareness and market share.
Are you worried about the economic implications of what's happening on your investor base and people cutting off their clean investing, and with everything that's happening, it may affect retail investors especially?
I think we all are, but yes, I think we saw ESG themed funds and sustainable funds remain fairly resilient through the pandemic. Who knows what the future holds in terms of this period of potential contraction of the markets, and certainly a shift, but we've seen that actually it's leading to some people coming to us as an alternative to public equities as they see those pulling back sharply. This is a non-correlated or sort of negative beta asset in comparison, in that even despite interest rate fluctuation, it's still an option that offers diversification, and also the impact that comes along with it.
One question from my side, last one, is how do you define the level of risk that you're willing to take, right? Meaning, how risky a business can be and still be on the platform, given also the fact that typically the lower the amount an investor is, or a user is investing, their sophistication might not be very high, and you might have people investing their income or part of money that they cannot easily spare on securities that definitely involve some kind of risk.
Yeah, Kostas, thank you for that question. So as a regulated entity, our first responsibility is to protect investors, particularly since we're working with retail investors as well as accredited and institutional. But so FINRA has its own rules about the amount of a net worth or income that a non-accredited investor can put in. So there are caps, but certainly, any investor shouldn't invest any amount that they aren't comfortable potentially losing. And that's the case generally with investing, but in this case, like you say, it's even more critical to be protective of. For accredited investors, they can put in as much money as they want, and that's up to them to manage the risk. What we do, we're not financial advisors, but we are very careful about what we do put onto the marketplace, to ensure that it not just meets the bare minimum of what the SEC requires, but that it also meets our internal business standards. We have something called the RAISE model. So we look for revenue, ambition, impact, that's both social and environmental. And so that's kind of at a high level the screen that we're using to identify projects.
And maybe to follow up on what, sorry,
go ahead.
And maybe to follow up on what Kostas asked. What's how much time usually do you guys spend on due diligence and screening projects? And let's say how many projects you're looking at, what's the conversion ratio between how many projects you're doing a certain due diligence process and looking into versus how much you're actually getting into the platform?
Yeah, so to date, we've screened about 300 deals, and we've let on 15. So that, it's about a 5% conversion rate. And much like the prior speaker, most of those deals we've been screening manually from the outset. So the diligencing software is something we've only just started using internally, and we'll be rolling out externally as we get through the seed round. But in general, to do that manually, it takes about 3 months to move a project through the whole process. With the software, we can get it down to a week or so for our staff time, which is a giant source of efficiency. But yeah, I mean, these are SEC filings, so we have to ensure that they are properly disclosed to protect investors.
Thanks.
And then that was my follow-up question as well, is do you have any type of set metrics or threshold in terms of how specifically you vet companies on the platform? Because the one challenge is the only thing that's better than 100 companies is 100,000 companies. So because the more you're closing, the more investments you have, the more cash you're getting. It's all kind of, more is better, regardless of quality, as long as investors put money in.
Yeah. So that's the seesaw of a two-sided marketplace. Is we need to both build trust with our investors, ensure that they are finding deals that they're excited about, and that they have appetite for, and then similarly, like you said, fuel the engine to hit our revenue goals and growth goals. And I think that as we utilize the software more effectively, we add to the template library and make it simpler as a tool for entrepreneurs and project developers to get onboarded quickly. We can get much more deliberate and get a higher pull through of projects as that becomes efficiencies of scale kick in.
Understood. Nadav, Kostas, anything?
All good. Thank you, Franz.
Then yes, thank you, Franz, and thanks to all the startups who have presented, shared hopes, dreams, challenges, everything. I know it's tough getting up there and getting in front of investors and sharing your spiel, but your founders built in venture scale companies, so you signed up for this, so it's only a pretend. Sorry. Hopefully you get a lot of volume and action from this as well from other investors who are tuning in. But now it's time for us to go into the last segment of the Startup Tank, and that is the startup of the night. And this here will pick Kostas, Nadav, myself, the companies we really found to be the best, the most interesting for us. So I can let you start, Kostas. Who are the top 1 or 2 companies that you're most interested in, and why?
Sorry, let me unmute. So I think, quite a few interesting companies. If I had to pick 2, I will pick 2, not 1. I was interested in what Atlas is doing, mainly because it's a very interesting industry, and it's very difficult, very competitive in, at the level of what the alternative protein companies are doing. But if you go one level up, where you are working and you are helping, and you can work with all the different, from a business point of view, working as a supplier or as a partner for alternative protein companies, that's interesting. I understand it's a very challenging problem to solve, but I would definitely be interested to understand the tech a bit better and understand how it works. So, but if it works as presented, I think that could be potentially quite interesting. That's the first one. And then the second one, again, from the business point of view, I think Raise Green can be very interesting in allocating capital to the right resources and interesting businesses that are solving real problems. And it's something that, it's a marketplace. It's a business model that has been tried and has been tested before with good and bad results. We've seen both. But hopefully, if an experienced team incorporating all these learnings that you can have from previous similar models, I think can be very successful financially.
Nadav, you're up next. Who are your companies or company of the night?
Great. I'll start off by saying thank you guys for all the founders for the great presentation. I must say it was very interesting. And all of you guys are trying to solve very important problems. So that's already great. I'll share my thoughts about two, and then maybe we can go and each one can say is number one. I was impressed with NMAS Energy. I'm far from being an expert in the waste to energy or waste to value market. But from the little that I know, I think there's a lot of inefficiencies in that space. The problem, the challenge that Andrew mentioned about a lot of the energy providers and some of the clients not being tech savvy, it's probably a real challenge in terms of onboarding and sourcing new customers. So this is probably something, but it's also the opportunity, I guess. That's where the inefficiencies come from, and that's why they're not using great platforms, allowing them in terms of the all the digitalization of the supply chain. So this is one. The second one, I'll go with Kostas' choice. I think that Raise Green is also very interesting. A marketplace play. It's an interesting one. It's not an easy one because usually the main challenge is marketing. You have to spend quite a good money about marketing. You have to reach a certain scale. You always have to look at what is your customer acquisition cost versus your LTV. So it's not an easy business model, but it certainly have potential. When we think at Nomea about climate impact, here there's a different, because we look at CDR companies, at hydrogen, and here the climate impact is more about the additionality. How much new additional capital from investors that wouldn't either be able to invest in climate project would be able to do. So this is something that I don't know if Franz and his team have done the job in terms of quantifying and understanding the climate impact. Because I think this is very important. There's no doubt there's tremendous demand in the States, but also elsewhere, tremendous demand, younger generation, but I think also from the older generation, to be able to invest in climate projects. I think now Raise Green is mostly focused on solar, if I understood correctly, but I believe that they'll be able to scale to other projects. So I think these are the two on my end. But maybe Matt, I'll let you maybe share some thoughts, and then we can each one maybe pick our favorite one.
Absolutely. And to add to what you said about Raise Green, I would say Raise Green is definitely my top or one of my top two. And to add, not only does it deploy more capital, but as we've seen with crypto and blockchain, once your money's in on something, you get more in on something. So once people have invested into the climate, they seem to care more, talk about more for saving the climate. So I think you could have a double whammy of people putting their money in and then putting their mouth and their actions where their money is, so to speak. So I was a big fan of Raise Green and what they're doing, especially as my background is marketplaces and growth hacking. And that's kind of a business that I understand well and know how to scale and grow. So I would give them alongside with, I'm a big fan of what Alt Atlas is doing. I like picks and shovels businesses where it's much easier to sell the picks and shovels than it is to mine for the gold itself. I think those two are probably my top startups of the night, but the Aero Powders solution of insulation, I find that very, very interesting as well, when you're able to turn something of waste into something of value, especially when it is such a large scale. So I think in that order, but based off of what everyone said here, it looks like we have 3 votes for Raise Green as either number 1 or number 2, which in my mathematical book would put them as the startup of the night. Do we have a consensus, folks?
Yes, I agree, and I think I would have gone with Raise Green as my number one as well. But I'd like to emphasize again, thank you for all the other founders who are doing amazing things in the climate space.
Yes, thank you to everybody for presenting and everybody for, let's face it, just putting your ass on the line and trying to solve the problem. If you're here, you could have had a better job, making more money with less hours, less stress, more time for the family. And instead, you're trying to change the world and getting beat up about it. So thank you, everyone. Franz, you want to say something real quick?
I'm floored. Thank you so much. Really delighted with the experience, and thanks so much for having us on the Startup Tank. Anyone can invest in these projects. Go to invest.raisegreen.com, check them out, and would love to hear from folks about our round as well. So thanks so much for the opportunity and for the honor.